All right, good morning. This is Beyond the SEAF Model, effective December 4th, 2023. Let's get started. So our SEAF signals for this week are technology, and new to this week is financials. Technology has been a signal for quite a bit of time now. Key highlight though for technology is we're starting to see a little bit of a weakening in the weekly trading flows. We started that last week, and that trend seemed to continue. What does that really mean? All that's telling us is that while we're having some really strong momentum from the tactical and the strategic time periods, we are seeing some weakening in the trading. Now, remember, with the SEAF model, we're not biting on any one particular time period, but we do want to highlight some of these trends. So again, technology is a SEAF signal for this week, but the key takeaway is if you are ahead, if you're a manager, you're ahead, and you want to lock in some of the profits, this might be a good time in technology to start to pull off some of your positions, lock in those numbers for the end of the year. And this isn't a requirement, but just with the softening of these flows, that is something that can happen. Financials, we've been tracking financials now for a couple of weeks, kind of been a key place to keep an eye on. We're going to highlight this a little bit more when we look into the rainbow charts, but as we're seeing, still that momentum strength from having a little bit of a weakening strategic or quarterly ranking to strong tactical and strong trading week. Flows we talked a little bit last week how flows were weakening due to the likely due to the holiday. We did see back a resurgence in flows, seeing a little bit more comfortable in these numbers with the strength that we were seeing behind them, and financials being our top ranking for the trading week. Last but not least here, in terms of the top three, real estate kind of jumps in. Really just being strong across all three time periods, coming in with a ranking of 9 for total. Again, I'll show you a little bit later with the rainbow charts, but starting to see some interesting things in real estate. Potentially some speculation by the broader market that we will be having some rate cuts next year. We're not exactly sure, but the money is flowing into real estate, and that's something to keep a note on as being in the top three. Lastly, looking at energy, we did note that energy was third in the trading week last week. This is why we don't bite on any individual time period, seeing any kind of outperform or any kind of extra movements in money flows, specifically even for the weekly. So, last week energy was ranked third for the week, dropping back down to 10, with the flows being a little bit stronger, believing that last week was maybe a little bit of an aberration. Energy still sits in this neutral ranking territory due to the fact that strategic is sticking, but energy still a place to avoid as of right now due to the flows. Quickly, just looking at our heat map for this week, wanted to highlight again technology having actually a slight outflow for the trading week. Again, super strong through tactical and strategic time periods. We're not ready, it's still the top ranked item. But again, if you have a little bit of a lead, you want to lock in some wins for the fourth quarter with your technologies. This is a time to potentially do that. Very strong in financials here, and energy and healthcare kind of still struggling down toward the bottom. Other things kind of look for utilities having a nice little week. We'd like to see something continue there, as well as some broadening, slight outflow in consumer staples. Nothing to really see here yet, but just something to kind of start to track. Now to our rainbow charts. This is kind of what I was talking about with technology, right? So we peaked up here into the high ranked, for a while there we were ranked at with 3, with 1 across the board. We're starting to see a little bit of this middling in hanging out in the favorite territory. And what does that correlate to? Outperformance versus SPY has been flat for a little bit now, as we've kind of done a middling road. We have seen this pattern before, happening in earlier parts and throughout the year. Again, this doesn't necessarily mean that we're going to underperform. All it's meaning is we're kind of hanging tight. Maybe the market's catching its breath on technology, and Where it goes from here is really depending on these flows. So we're going to be keeping an eye on technology's weekly flows as they transfer over to the monthly. But as of right now, as you can see, we're a little bit flat in terms of our relative outperformance to SPY, which is breaking, not breaking trend, but, kind of giving ourselves a breather here. Off to energy, wanted to kind of highlight, we peaked up into this mid-neutral territory last week, still sitting in this neutral-ish, avoid-ish ranking. And, we had that slight blip in the relative outperformance, and then it started to track downward. Flows are still coming pretty heavily out of energy. And as we can see, that's continuing this little bit broader relative underperformance trend that we've been having since, mid-September. Now on to real estate. This is one of the things I kind of want to show. This nice little relative outperformance spike in for our real estate coming into this mid-favored ranking. This is breaking a large, broader trend that we've been seeing in real estate for good most of the year. Having this little bit of outperformance, breaking this box that we're also seeing since September. So real estate looking good. It is top 3. It is not a favored or a signal for this week, but real estate looking good with this relative outperformance. And finally, financials. We've been watching financials as it's kind of slowly climbed from this avoid ranking up now into our mid-favored ranking, and we're starting to break out. I've been calling out, there's this box that we've kind of been trading in the relative outperformance. Financials finally breaking out of that box. And really, as long as we continue to see major inflows like we have been into financials, this looks like a really good pick, and hopefully we could ride this trend out for a while. That's all I have for Beyond the SEAF Model this week. Thank you guys, and have a wonderful week yourself.